Good morning, good afternoon, and good evening, everyone, depending on where you are. And welcome to the the eighth installment of FNA's Suptech Broadcast series. Before we begin, let me provide some quick housekeeping remarks. This broadcast follows a 60-minute format. We'll spend the first 45 minutes talking with our guests, and the last 15 minutes taking questions from the audience. If you'd like to ask a question, as many people do, please don't use the chat option, but instead use the Q&A widget. Both the chat and the Q&A widget are at the bottom of your screen, so please use the Q&A widget, and then our guests will aim to answer as many questions as they can during the Q&A session at the end. For those of you who aren't familiar with the FNA, we are a fintech startup company or scale-up that specializes in advanced analytics and simulation. We work across 4 core sectors, namely central banks, commercial banks, financial market infrastructures, also known as FMIs, and national security. Our software is tailored as solutions for each sector. So where a central bank might use our technology for RTGS stress testing, a commercial bank might use our technology to optimize its internal liquidity usage. We're very active as a company in the Suptech space. This slide here, by the way, which is by the way based on, this slide here briefly explains our core collaboration areas with the central banks and financial authorities. And those are loan data analytics, RTGS stress testing, and liquidity monitoring. And let's proceed to the session of today. So today we have Jermy Prenio joining us from the Financial Stability Institute at the Bank for International Settlements. And we have Ramunas Baravykas, I hope I pronounced that correctly, the Director of Data and Statistics Department at the Bank of Lithuania. And we will be talking about the impact of Suptech on banking supervision, both globally and in the European Union. So let me kickstart this session. Technological innovation is rapidly transforming financial supervision. We'll discuss how the emergence of Suptech is transforming specifically banking supervision globally and in the European Union. We'll focus on key topics including data analytics, cross-border collaboration, regulatory technology innovation, proportionality and ethics of AI, and the future of Suptech. The speakers draw on extensive expertise to provide regulators and policymakers with valuable guidance on harnessing Suptech for more effective oversight while balancing innovation, stability, and public interest. So this forward-looking session will shed light on how Suptech can enhance financial resilience and inclusion worldwide. So without further ado, let's kick it off. Just hide the slides. Let me first ask our guests, and I'll start with you, Jermy. Could you provide a brief overview of your current work on Suptech?
Yeah, no, thank you very much, Thomas. I hope you can hear me because I suddenly lost your audio earlier, so I panicked a bit. But anyway, I think everything seems good now. So thank you very much again for that question, and thank you very much for the kind invitation. So it's a pleasure to be here. Maybe before going to our current work on Suptech, maybe just a brief background of our work in general. So we started our research work on Suptech in late 2017. And since then, we have produced 6 papers on the topic, right? And complementary to that work was the establishment in 2018 of the informal Suptech network, or the ISN, which is basically a group of Suptech specialists from financial authorities in different jurisdictions, right? And we use the ISN, or the regular interactions with members of the ISN, to inform the papers that we produce on the topic. And the 6 papers that I've mentioned that we issued so far mainly focused on describing at a high level some specific Suptech tools or use cases, as well as identifying sound practices in the exploration and development of such tools, right? And based on our observations, the processes in place to explore, experiment, and develop Suptech tools in many financial authorities are now somewhat mature, But then, when it comes to the deployment of the tools and to actually embedding them or making them critical instruments in actual supervision work, evidence of successes in this area is still a bit unclear, at least from our perspective. So that is why the current focus of our research work now on the topic is on identifying sound practices in this area.
Thanks so much, Jermy. So let me ask you the same question, Ramunas. Could you provide a brief overview of your current work on Suptech?
Yes, absolutely. I will be very glad to give you an overview of our ongoing efforts in Suptech, which is closely aligned with our broader data management strategy. First of all, thank you very much for having me here in this very interesting discussion. So our current focus lies at the intersection of two pivotal initiatives, the transformation of our data value chain and the strategic implementation of Suptech tools. We recognize that data forms the bedrock of effective supervision process, and therefore our journey begins with a comprehensive transformation of our data management approach. We are transitioning from a siloed and point-to-point data model to a more, I would say, collaborative and streamlined hub-and-spoke model. And this strategic shift allows us to centralize and standardize our data across various touch points. This transformation empowers us to harness data as a strategic asset, enabling more agile and data-driven decision-making. And data management and Suptech are closely related and mutually, I would say, reinforcing. Suptech relies on accurate, timely, and well-organized data to function effectively. Thus, good data management practices are crucial, I would say, prerequisite for successful Suptech implementation. On the other hand, Suptech can enhance data management by automating processes, improving data accuracy, and providing insights that would form data governance strategies. So both areas reinforce each other to create a foundation for effective and responsible use of technology in supervision. So simultaneously, we are harnessing the power of Suptech to enhance our supervisory processes, and we are integrating relevant Suptech tools into our workflow to boost efficiency and depth of analysis. I would say we believe that this augmentation of our capabilities guided by data-driven insights will empower us to proactively identify trends, mitigate risks, and ensure the stability of our financial ecosystem. So our approach underscores the symbiotic relationship between Suptech and data management, and together these initiatives lay the foundation for a forward-looking and resilient supervisory framework.
Thanks, Ramunas. So Jermy, taking maybe a step back from the implementation and the sound practices of Suptech tools, and I guess this is maybe going back to one of your previous papers, but which Suptech initiatives in the areas of data collection and data analysis, respectively, do you find that supervisors are focusing on?
Yeah, no, thanks. So indeed, as you know, these are the two that you mentioned: data collection, data analysis. These are basically, the main or the broad areas where Suptech can be found, right? And as Ramunas mentioned, there's a symbiotic relationship between data and, of course, Suptech. So on data collection, what we observed is that there's this trend towards more integrated and granular reporting. And these, if I can call it trends, these two trends are quite interrelated, right? Because integrated reporting, as the name suggests, it's basically a shift away from having different reports to satisfy the needs of different internal users within a financial authority to having only one single reporting package, right? doing this means that you need to have reporting data at a granular level, right? So that it is easy for different internal users to extract and build the data that they need from the granular element. So that's why I said these two developments or trends are quite interrelated. Now, on the data analytics side, I've said this on several occasions already, so I might sound like a broken record here, but I've always repeated that there's a lot of interest among financial authorities in tools for analyzing unstructured or text data, right? Because from our perspective, I think financial authorities have long been using tools for quantitative analysis, right? But then they are quite handicapped when it comes to efficiently going through tons of documents. In general, they're still doing, going through documents manually, right? So that's why I think they see the greatest benefit in having these tools that are enabled, for example, by natural language processing in going through this text information or text data. But having said that, I think more recently we have also heard authorities, saying or putting more focus on strengthening their quantitative tools as well, right? In order to be able to monitor more effectively things like funding and liquidity flows, network of counterparties, etc. So no doubt, I think that this must have been influenced at least partly by recent bank failures. So there's a more, shall I say, what we observe is that there's now more interest in strengthening these quantitative tools.
Just a quick follow-up. Is there also a shift in who you see actually using Suptech tools? Is it like from being market conduct authorities to being more sort of prudential supervisors? Is there a shift there, or is it essentially the same regulatory bodies that are doing just more things?
Yeah, I think it's more on I think it's broadly similar, right? On both conduct and prudential supervisors. I think there's a lot of interest as well. And the thing that I mentioned about, natural language processing, there's a lot of potential when it comes to conduct supervisors, because that they receive a lot of these things, right? A lot of this tons of, regulatory filings, documents that they have to go through, customer complaints and all that. So there's great potential there as well. But the thing that we observed about now shifting a little bit towards, again, quantitative tools, I think it's more prudential, the prudential supervisors that are doing that, essentially because of the bank failures that I mentioned earlier, right? So I think that's what triggered this sudden interest in further strengthening their quantitative tools.
Oh, thanks, Jeremy. Let me turn to you, Ramunas, and ask, so what have you been focusing on at the Bank of Lithuania in the Suptech space?
Yes, so we have undertaken extensive experimentation and careful testing through proof of concepts, encompassing critical areas such as licensing, authorization, dispute settlement, and various other supervisory processes. Furthermore, we have conducted detailed assessments of advanced data collection solutions, delving into very, very granular level of data. So at present, our strategic focus is on diligent implementation of proven solutions. And this commitment spans across the entire spectrum of data operations, encompassing phases of collection, secure storage, comprehensive analysis, and seamless dissemination. So during last 2 years at our organization, I have been dedicating my efforts to a multifaceted initiative aimed at transforming our data value chain and elevating our data management practices. We want to rise maturity according to CMMI Institute methodology. We follow this methodology. So this initiative has been marked by several key focuses. So one of the key focuses is data governance framework. So we have implemented a robust and comprehensive data governance framework. This framework ensures that our data is managed consistently, embedded hub and spoke governance model, to have accurately and secure data across the organization. So we do it by defining roles, responsibilities, and data ownership. So we have established the necessary bodies for smooth data governance, like data governance committee, also enterprise architecture board, etc. Another key point is advanced data and reporting collection. So our efforts have centered on implementing centralized and efficient data collection mechanisms to support the main principle, collect only once. So we established the central data and reporting collection unit, and this unit is responsible to transform the previous data collection operations to support with a new relevant innovative technology. So this will enable us to streamline our data collection processes, enhance data accuracy, and accelerate our reporting timelines. We are making the final preparation steps and intend to test the solution with the market participants, I mean financial institutions, already in October, so that we could go live in the first quarter of the next year. So first goes banking supervision. Later on, we'll join other financial sectors like insurance, etc., etc. So data platform also is the key point where we store data for the safe and convenient data access, smooth data distribution mechanisms, and integrated analytical tool capabilities. So summarizing, my focus at the organization has been on orchestrating a comprehensive transformation of our data value chain.
Just a quick follow-up question. So when you talk about a hub and spoke system, is that in the data storage? So you have an enterprise data warehouse in the middle and then departmental sort of sub spokes? Or is it also in the data collection that you have different entities sort of reporting to different parts of the system?
So mainly hub and spoke principle represents our data governance model. Actually, we have centralized data value chain in the Bank of Lithuania. Previously, we had that different departments deal with data collection, data storage, and analytical capabilities. Now, we have centralized units which are responsible for particular phase of the data value chain. One unit is responsible for data collection. In the middle unit is responsible for providing necessary data platform with relevant analytical tools. Another unit is responsible for smooth data dissemination. So those three units are central in the Bank of Lithuania, and now they are working data and statistics department. Another one very key unit is the data governance unit, which is responsible to prepare data architecture, I mean data model for the whole financial sector, to prepare and transform the data processes. For example, process for new data requirements from different business units, accessibility processes, etc., etc. So we are working on that. Also, specialists working in these units for metadata, master and reference data, etc., etc. So key responsibilities are in the central, and this is like a hub for the whole Bank of Lithuania. Other units, I mean supervisory departments, financial stability departments, economic departments, perform a spoke role for analysis. So they have access to necessary data and work on only analytical part, not thinking about how data is collected, because there is a central unit responsible for that.
Well, thanks, Ramunas. That's clear. So let me ask you, Jermy, from your global perspective, what are the typical challenges that supervisors face when they integrate Suptech into their existing processes that are perhaps more antiquated? And how do they overcome these challenges?
Yeah, so maybe I'll so I mentioned earlier about the fact that this is an area where we find little evidence of success, right? In integrating Suptech into supervisory processes. And I think it's not just about the antiquated systems that we have in place. I think it's more to do with, how the introduction of innovation in the supervisory space, right? Because that alone is a bit challenging already. So I can mention like the key challenges that we've observed so far, and in some cases, I think financial authorities have put in place measures already to address them. In others that may not be that successful in implementing measures to address. But maybe let me start by the first one, which I think this is a common observation that we have in many instances. Developers of the tools tend to be detached from supervision work. So Suptech developers, typically have IT, data science, or technology backgrounds, right? And they may not have experience in actual supervision. So they don't really speak the language, nor are they familiar with supervisory processes, right? So there may be a gap between what supervisors need and what Suptech tools are being developed or being produced, right? Financial authorities are trying to address this by making sure that there's constant interaction between supervision staff and the Suptech developers, right? And also to involve supervision staff throughout the development cycle of Suptech tools, from identifying which tools to develop, to testing them, and then to providing ongoing feedback once the tools are deployed, et cetera, et cetera. On the other hand, authorities may also be providing trainings to their Suptech developers as well, right? To give them the basics or the fundamentals of financial supervision, so that they are, at least they become more familiar and they have more background of the processes for which they are developing tools for. So that's what we observed in how financial authorities are addressing this. Another challenge I can think of is this lack of understanding among supervision staff of new technologies that are enabling data analytics, right? And to be clear, supervision staff don't have to be experts in these new technologies, right? But then the lack of familiarity, even with the basics, can lead to lack of interest or even lack of trust, right? So the tendency is to just use the tools that are most familiar to them, gravitate towards Excel and all that. So, and this resistance to try new things could be a cultural thing as well, and not just because there is lack of understanding. So I think these are like interrelated challenges, right? Lack of understanding and a cultural thing as well. Now, authorities are trying to deal with these interrelated challenges by introducing changes to their capacity development practices. So, for example, a finding of a paper that my colleagues and I published last year show that many financial authorities are now hiring more supervision staff with skills related to digitalization of finance, right? Such as IT and data science. And also their trainings for supervision staff are already putting more emphasis on these skills. Now, these things, the hiring and the training practices do not only result in better understanding about the new data analytics technologies by supervision staff, but it also fosters more openness to try new things, right? So that's why it could also foster a change in culture. Now, I think the most important challenge, at least again from our perspective, to integrating effectively integrating and embedding Suptech tools in supervisory processes is this lack of clear guidance or governance surrounding the deployment of the tools, right? So in many instances, we observe that there are very good Suptech tools that have been developed and made available to supervision staff, right? But there's no guidance as to how or when they should use them. So use of the tools are basically left to the interest and willingness of the supervisors on the ground. In some cases, they might have both interest and willingness, but they might not have time to actually learn how to use the tools, right? Because supervisors are always busy. They're quite busy, doing their main responsibilities. So they don't really have time to incorporate them on their own in their workflows. So the tendency is, that these very good tools are left unused or used only by very few supervisors, right? So from our perspective, once a Suptech tool is developed, there needs to be clear guidance and mandate as to when and where in the supervisory processes the tools should be used. And I think equally important, there should be guidance as well given to supervisors as to the appropriate role of the outputs of the tools in these processes, right? And what are the limitations and risks to using the outputs of the tools in making supervisory decisions or actions. So from our perspective, I think this is one that's not really there yet, and some authorities are trying to develop some of these guidance, but this is not something that, at least again from what we observe, is common among supervisory authorities.
Thank you so much, Jeremy. That's very clear. So I see it as the Suptech developers don't know supervision, the supervisors don't know technology, and then there's a lack of framework to actually bring them together.
Exactly. So bridging this language gap, I think, is an important undertaking that should be made for Suptech deployment to be successful.
So Ramunas, does this sound familiar to you? And how have you approached in Lithuania this balancing between innovation on one hand and stability and old-fashioned processes on the other hand?
Yeah, it sounds very familiar what Jermy just said. In our approach to balance innovation and stability objective, we've taken a route by separating the tasks of day-to-day supervisor activities from the transformative process of data management and other innovative tools. So this approach allows us to effectively manage both innovation and stability while driving technological advancements. So balancing innovation and stability objectives requires a, I would say, cautious approach by supervisors. So here's how we navigate this delicate balance. First of all, we use piloting and testing. So we started with tests and pilots to validate the feasibility of Suptech solutions on a smaller scale with very specific dedicated teams before the full-scale implementation. So testing allows us to identify possible vulnerabilities, glitches, or unforeseen consequences that might arise during the integration of new technology. So those small teams were built ad hoc to test particular solution. Later on, we grew to so-called digitalization and advanced analytics unit, which was responsible only for supervisory tools, relevant IT tools. And now we're moving to digital transformation center, just recently established, who will be responsible for the whole processes at the entire organization. So this allows us to understand if and how new components fit into the foreseen infrastructure. Second, I would focus on gradual implementation rather than swift and radical changes. We prefer a gradual implementation approach. This minimizes the disruption to existing business flows and allows time for adjustments based on real-world performance. Thus, we implement changes like framework by framework. As I mentioned, we are now implementing new collection system for so-called CRD4 package, while together with the market already working on the second framework reporting case for electronic money institutions. Third, here I have a very important point: collaboration with industry. So we collaborate with industry stakeholders to gather insights and feedback on the potential impact of new technologies to understand their threats. I mean, financial institutions, their pain points, to try to turn it into the gains. So thus we have established not only internal group of expertise coming from different departments, I mean, statistics, supervisory, stability, etc., but also external group consisting of representative of financial institutions, as well as from IT sector and RegTech industry experts. So this helps us aligning innovative approaches with the needs of the industry and all other stakeholders. and capacity building. So training and upskilling of staff to understand and harness new technologies is crucial. Thus, we have used not only online learning platforms, participate in the seminars organized by European institutions. We also do our internal courses, what we learned from previous example of implementation of tech tools, etc., etc. So a well-prepared workforce ensures that innovative solutions are effectively integrated.
Thanks, Ramunas. That's good to know that you're doing some of the things that Jeremy recommends to do. I want to ask you, so how on actually implementing these tools, have you seen how applying AI, cloud computing, and other technologies has transformed your supervisory capabilities? So on the positive side, and perhaps on the negative side, have you seen any risks or pitfalls with these technologies?
Yeah, so application of AI, cloud computing, and other technologies, I would say, has started to transform supervisory capabilities with a more potential foreseen for the future changes, I would say. While we are in early stages of this transformation, we are beginning to see how these technologies can enhance our supervisory practices. For instance, AI enables supervisors to analyze large volumes of reports and data more efficiently, so allowing us to point weekly covered risk management practices in reports of the financial institutions, for example. Also detect trends and anomalies, I would say, that were previously challenging to identify. So at the Bank of Lithuania, we have also experimented with AI to anonymize dispute resolution documents and remove other sensitive information before making documents public. Also, we are trying to use cloud computing, but on-premise cloud computing, which provides us with the flexibility to scale our infrastructure. So you could do more with less. However, along these opportunities, there are risks and pitfalls we need to address. One notable concern is the potential of biases in AI models. If training data is invalid, it could inadvertently impact supervisors' decision making. So it's very sensitive moment. Also, ensuring fairness and accuracy in AI outputs is critical to avoid biases outcomes. So yet the transparency of AI algorithms and the explainability is challenging, which might hinder ability to understand and trust the results. And of course, data privacy and security are paramount as we handle sensitive information. So costs are implied as we need to ensure that data protection measures are in the place to prevent breaches and unauthorized access.
No, thanks, Ramunas. That's clear. I'd like to ask you the same question, essentially, Jeremy. From your global perspective, what are the positives and negatives of Suptech application?
Yeah, so I think Ramunas mentioned do more with less, right? So definitely these technologies, the technologies that you mentioned earlier, AI, cloud computing, they have definitely increased efficiencies in supervisory processes. So supervisors are now able to, analyze vast amount of data available to them at a much faster rate, right? And these technologies also enable them to identify potential supervisory issues that may have been difficult to spot using past generation of analytical tools. So these technologies result in more efficiency and effectiveness in supervisory processes, as I mentioned earlier. I'll mention only one potential pitfall because I think Ramunas already mentioned some of them. The thing that really concerns us is that there might be too much reliance placed on these tools, particularly AI-enabled data analytics tools, right? And there could be a risk that supervisors would simply rely on Suptech tools to identify key issues, and if that happens, they could be missing some nuances in supervisory issues that may not be fully captured by Suptech tools, right? The worst case scenario is that this reliance could lead to assumptions that what the tools do not detect does not exist. So in either case, this undue reliance could result in supervisory blind spots. And over time, our main concern is that this could result in the loss of institutional expertise and knowledge as well, right? Which is a difficult thing, given this collective knowledge that supervisors have in a financial authority. And that is why I mentioned earlier the importance of having guidance provided to supervisors as to how they should use the outputs of the tools. What's the appropriate role of the outputs of the tools, and what are the limitations and risks when relying on the outputs of these tools, right? Now, what I want to emphasize though is that Suptech tools are just that, right? They are just tools. Supervisory decisions or actions still depend on the supervisors themselves. So even if Suptech tools are quite effective at, for example, providing insights as to potential issues or problems in supervised institutions, if these insights or information are not acted on, then the effectiveness of Suptech tools won't really translate to a more effective supervision.
Thanks, Jeremy. That makes sense. So perhaps I'm going to skip ahead to the guidance. So I mean, Jeremy, let me ask you this question first. When we talk about guidance, what specific guidance can you provide for ensuring sort of ethical and fair AI adoption, for instance? How can supervisors avoid things like bias, opacity, and related issues with AI? Oh, you're on mute, Jeremy. Sorry.
Sorry about that. So yeah, on this, I'm not really quite sure, whether the AI algorithms are quite unique with any other model when it comes to bias, right? So that's why I'm not quite sure the level of relevance of these issues when it comes to Suptech, because Suptech basically just aids supervisors in going through information that are either already available to them or publicly available, so that they can exercise their mandates, right? Whether it be prudential conduct or market integrity. Indeed, there might be some sort of bias if the algorithms, for example, are not calibrated for different types of supervised entities. So, for example, the algorithm may be biased against smaller entities if it is calibrated using data from larger entities, right? But then, as I mentioned earlier, I'm not sure if this is unique to AI, because this biases could happen with any other models as well, right? But having said that, I think there's no harm, if supervisors put in place measures to ensure ethical and fair AI adoption as well. In 2021, we published a paper that looked at emerging regulatory expectations on AI use in the financial sector, right? So we mentioned in that paper the typical measures to address ethical and fairness issues in AI models. So I'll just mention some of them. So these include, for example, things like establishing an ethical code of conduct to promote non-discriminatory practices, seeking to diversify input data, careful review of training and validation data during the model training process. Also things like establishing policies for the procurement and processing of data, especially if the data is not available internally and you're getting the data from the outside. Also having data sets that are separate from training and validation data to specifically check for model bias. Also embedding non-discriminatory rules into the AI model itself, et cetera, et cetera. So there are many, I think, measures out there to prevent bias, right? So financial authorities can also observe these measures, of course, when developing their own Suptech tools. And maybe let me just mention there's a lot of ongoing active work in assessing fairness of AI models, not necessarily for Suptech purposes, but in general, and for use of AI in financial services. The MAS, for example, in Singapore is very active in this space as well. So thank you.
Thanks a lot, Jeremy. So let me turn back to you, Ramunas, and essentially ask the same question. And do you find that what Jeremy is saying is familiar in terms of what guidance you're providing yourselves?
Yeah, so maybe I would probably focus on 4 main points to have in mind, but also in place, I would say. So Jeremy already mentioned data. separation. So data quality is the key. Supervisor should prioritize high quality, diverse, even and representative training data to mitigate bias in AI models. And if you lack of data, so maybe AI is not for you at the moment. Also, if you have necessary data to train your models, so regularly audit and assess data to identify and rectify any biases that emerge. Also, human oversight. So implement human oversight of AI decision-making process to avoid blindly following algorithm outputs. And sometimes we believe that people at the end making decisions, but if humans are not challenging the results of AI model, just accepting it, it's not good practice. So you should ensure that the human is the last who make decision based on AI models outcomes. Jeremy mentioned ethics committee, so I totally agree. Those committees can provide guidance and on ensuring ethical AI deployment. And of course, I would focus on education and training. So training staff involved in AI implementation to ensure a deep understanding of ethical consideration is crucial. So supervisors should be well versed in AI ethics to provide effective oversight. So these 4 points, not to have only in mind, but also in place.
Thanks, Ramunas. That's clear. So we have time for one final question between the two of you before we open up for questions from the audience. So Jeremy, let me ask you first, going forward, where do you see the greatest opportunities for supervisors to collaborate across borders and perhaps harmonize their Suptech initiatives?
Yeah, so thanks for that, Thomas. So incidentally, we recently did a joint Suptech survey with our innovation hub. And indeed, there's a lot of interest for international collaboration in the area of Suptech, right? And mainly through knowledge sharing activities such as conferences, workshops, meetings, etc. So surprisingly, there's a lot less appetite than we expected to actively co-develop Suptech prototypes with other authorities. And I believe this must have something to do with limited resources at financial authorities, right? So they would rather focus on their own work rather than devote resources to help build common prototypes at the international level. Now, the areas where respondents thought would benefit most from international collaboration are, AML-CFT, ESG, regulatory reporting, corporate governance, and cyber risk. And I would characterize these areas as one, those areas with cross-border relevance, such as AML-CFT, regulatory reporting, and cyber risk. Second, those areas that are quite important, but where analytics capabilities may not be that mature yet, such as on soft topics like corporate governance. And then third, on areas that are emerging or relatively new concerns, right, such as ESG. So I think those 3 areas are, I think, at least based on the responses from the survey, would benefit most and where the greatest opportunities might be for cross-border collaboration.
Thanks, Jeremy. So let me ask you the same question, Ramunas, cross-border collaboration.
Yeah, I believe that greatest opportunities for cross-border collaboration on Suptech initiatives lie in areas where mutual challenges exist and where the benefits of shared insight, data, and technological capabilities can bring effectiveness of supervision. So I would highlight maybe several. So data standardization and sharing, so collaborative efforts to establish common data standards and protocols for reporting can streamline cross-border data sharing among regulatory authorities. This reduces the burden on financial institutions and enhance the quality of and consistency of data. Harmonizing reporting requirements and processes across jurisdictions can lead to more efficient and consistent reporting by financial institutions. So shared reporting frameworks enable regulators to collect comparable data, making cross-border analysis and oversight more effective. So thus, we see not only national initiatives in this field, but also pan-European initiatives as well, like IREF or EBA feasibility study on integrated reporting would be those examples. Another thing, maybe multinational regulatory sandboxes. So collaborative sandbox allow fintech and regtech firms to test innovative solutions across multiple jurisdictions simultaneously. This promotes responsible innovation while maintaining regulatory oversight. Thus, such sandboxes could be used to test and improve Suptech tools. I believe that uptake would increase by supervisory authorities if Suptech solutions pass the sandbox test. Also working on best practices for addressing biases, transparency, and ethical concerns in application of AI for supervisory processes, and interoperability of systems, or we can call it maybe regulatory supervisory APIs, application programming interfaces. So collaboration in this field could lead to the development of interoperable Suptech systems that allow regulatory authorities to share data and insight for decision making seamlessly. Maybe those points for cross-border collaboration.
No, thanks a lot, Ramunas. That seems like a good place to start, certainly for endeavoring into the dangerous or the challenging, I should say, cross-border field. So let's wrap up the main discussion here, and I'll see if I can find some interesting questions from the Q&A. We just had one in the chat from Siegfried Wutzhofer, who asks, and I think I'll ask this to you, Ramunas. Do you already actively use LLM-based technology such as ChatGPT? And if yes, how do you deal with privacy concerns?
Yes, very good question. Actually, just recently, we the Center of Digital Transformation announced the rules how we, as a supervisor and central banker, should deal with ChatGPT. So actually, we engaged with this tool, but every person who uses and prepares some deliverables should make clear how much and what episodes was built with using ChatGPT tool. So disclosure of information. No sensitive information could be posted in this tool. No sensitive information could be put. So everyone who uses ChatGPT is monitored and reviewed by other persons and it made public and clear that if you use ChatGPT, that means that you are monitored and supervised. So more rules are put to those persons who are using this tool. But yes, the main idea is that we should engage and use innovative tools to understand how they work, what they can bring, what risks they bring, etc. For example, this tool is very language sensitive, and we can work in English and Lithuania. We can see and compare results generated in two different languages. And we noticed that results are completely different. And for example, in Lithuania is quite weak and obviously really generate a text without any logic sometimes behind that text. In English, it's more profound results could be delivered. And what I believe that not only supervisors use such tools comparable to ChatGPT. And I expect that we will see in the nearest future huge quality jump in supervisory reporting produced by financial institutions. And if supervisors were using AI tools to detect that in some reports of financial institutions, some risks areas are not covered very well, some weaknesses are noticed. So those tools won't be, I believe, relevant anymore, because the reports produced by financial institutions using ChatGPT will have high increase in quality, in reporting quality. So new tools should be examined by the supervisors how to deal with it.
So we need an AI tool to detect if others use AI tools. That's what you're saying.
Thomas, if I may chip in as well, just to share some insights from our recent survey that I mentioned earlier. So yeah, I think there's a small, no, not small, but I think you cannot really say there's an active use of LLM-based technology for Suptech purposes, but there's a lot of exploration, experimentation going on in financial authorities, right? And within our sample, there's a small proportion that have internal guidelines either on the way or been put in place on the use of LLM-based technology in their institutions. But these are high-level guidance, right? And like code of conduct kind of things, just to make sure that users of such tools do not like copy and paste sensitive information to ChatGPT, for example. And I think a couple of authorities have also explicitly banned the use of these technology in their institutions.
Yeah, it's probably a good idea if there is no clear guidance, or if the employees are not trained yet to know how to use these tools. Thank you both for answering that question. So I have another one from Tosin Adekanye. I hope I pronounced that correctly. He writes, I often feel like there is a divide between innovators and supervisors. How can those of us building Suptech tools entice supervisors to enthusiastically test and adopt these tools? So I think I'll pose that question to you first, Ramunas. What do you think innovators should do?
Yeah, actually, we, as I already said, that we don't expect that all supervisors would be very pro-innovative and keen on using innovative tools. So if there is a dedicated team to transform our processes into the digital era, so those are researching, reading papers, trying new tools, etc. And if something relevant they find for the processes of Bank of Lithuania, then the ad hoc team is built to test, to understand how this works. Is it relevant? Is it giving value added for the supervisory processes? So only smaller teams are those who accept, and from the smaller team, which is partly from the supervisors also consist, they can bring this change into the day-to-day processes, because if you try to rapidly change the whole process, so you would definitely face the resistance. But if you invite some colleagues who tries and see the value added, they go and act like a leaders to introduce new ways of working into supervisory practices.
Thanks, Ramunas. Jeremy, do you want to add anything to this one?
Yeah, maybe I'll just reiterate what I mentioned earlier. No, I mean, I think it's, don't just entice them to test the new tools, engage with them early, even in the identification stage, right? What tools to develop, because they are the ultimate users of the tool. So, they are the ultimate customers. So you should know what the customers want first before developing and testing any tools, right? And another thing is, you know, I think from a governance perspective, management should also provide or allocate time for the supervisors to actually engage with the innovators, right? And to test the tools. Because as I mentioned earlier, supervisors are busy doing their main responsibilities, right? Which is supervising financial entities. So unless they don't really have time to, think about innovations or think about new tools. So you have to dedicate or allocate a time for them to be able to do that. One, I think, idea would be, to incorporate in the supervision training programs, the testing of these tools or the introduction of these tools. That way, it's embedded already in the supervision training program, right? So that they can learn while they're learning about their actual supervision work, they can also learn about these new tools. What I would say is that, in many cases, I think supervisors are quite receptive to new tools as long as the value proposition is there. I think if it's clear to them that it can result in efficiency, in saving time for them, then I think there's really no resistance, at least from what we've observed. I think there's more resistance if the tool basically results in quote unquote more effective processes or more effective analysis, because in that case supervisors typically feel threatened, and they typically feel like their judgment is being questioned, right? So that's where we find more resistance in these new tools. If it's about efficiency, then it's all good, but it's more about effectiveness in identifying issues, identifying problems. I think that's where more of the resistance is coming from.
That makes a lot of sense. Thanks, Jeremy. So I just want to add that Fariz Hadid Singh in the chat also wrote that innovators could perhaps try to involve supervisors earlier in the development phase instead of just as users at the end of the development cycle, which I think is also what you both alluded to in some of your remarks. I think this is all we have time for today. So I would just like to thank you both so much for joining today's Suptech broadcast. And note to the audience that you will be able to get in touch with the speakers on LinkedIn. And you'd also be able to find me on LinkedIn if you have any follow-up questions to today's session. Coming up next in the Suptech broadcast, in the FNA broadcast series, generally, we have a CBDC broadcast on September 7th. And our next Suptech broadcast is on September 14th. So thank you thank you everyone for attending today, and see you next time.
Thank you.
Thank you.
Thank you. Bye.